I would say it's my base case. I think it's the most probable scenario that the US will be buying
Hmm.
Bitcoin. Yes. I think that's going to happen relatively soon. And they will probably be buying more than most people expect. So, based off the fact of billions of dollars being purchased by the Trump administration, the stablecoins, all of that, I think they're telling us that Bitcoin is going to go much higher. Some of the things that they could control of that would be buying it for the strategic reserve or the sovereign wealth fund, and so that's why I feel pretty strongly. I'm guessing that's going to happen. And what happens when that happens is that the U.S. is the most influential country in the world, and if the U.S. does it, every other country is going to have to do it as
Yep.
well.
Imagine Bitcoin at $1 million a coin. For Mark Moss, who co-runs the Bitcoin Opportunity Fund, that's not a fantasy, it's math. He points out that if Bitcoin captures just 1.25% of global store value assets by 2030, the market cap would hit $21 trillion, putting each coin at about $1 million. With Bitcoin's compounding growth rate, even slowing to around 50% annually, that target lines up. Some analysts like Arthur Hayes see it happening as early as 2027, while Cathie Wood projects $1.5 million by the end of the decade. Moss doesn't stop there. By 2040, if growth drops to 30% but Bitcoin grabs 8% of the global store value basket, it would trade near $14 million per coin. Extend that to 2050 with a 20% share, and you're looking at $45 million per coin. These numbers sound outrageous at first glance, but they simply follow the math of adoption curves and Bitcoin's unique scarcity. What could accelerate this timeline is government action. Moss highlights the possibility of the US stepping in directly as a buyer. With Trump's team deeply connected to Wall Street heavyweights like Howard Lutnick of Cantor Fitzgerald, already active in Bitcoin, MicroStrategy, and Tether, the groundwork for a strategic Bitcoin reserve or even a sovereign wealth fund is being laid. If the US moves first, the global domino effect would be inevitable. Other nations wouldn't want to be left behind, and that wave of sovereign demand could send Bitcoin into the stratosphere far faster than most expect. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
And so what's happening is Bitcoin is growing faster to take a little bit of the market share from real estate and from bonds and from equities. So the question we ask ourselves is, what percentage of that basket do we think we can get? Well, if Bitcoin can capture 1.25% of the store of value assets by 2030, that'd put it at $21 trillion or $1 million per Bitcoin. Now, we can check that math in a couple ways. Number one, we can look at the compounded annual growth rate, the CAGR, and how it's been sloping down. So I told you it's 85, now 65. That would finish the decade at a 50% CAGR. And we're already above that, so it'd have to drop pretty low to end up at about, so that's at a 50% CAGR. We'd end up at a million, 1.25% of the basket. So $1 million by 2030 is my target. We've seen Arthur Hayes say I think he said $1 million by 2027. Cathie Woods says 1.5 by 2030. We'll see. Okay, now let's go out to 2040. If Bitcoin could get to, again, following CAGR, continuing to diminish down, let's say it drops down to 30% for the next decade. Following the growth basket, if it can get to 8% of the store value assets, it puts it at $14 million per Bitcoin. And by 2050, if we continue the downward sloping of the CAGR, maybe it gets down to 20% at that point. And I just gave you reasons why it could even accelerate,
Right.
but let's just continue, it goes down. And by now, I believe the Bitcoin can get to 20% of the basket. That puts it at $45 million per Bitcoin. If we look at, MVRV, or we look at, the Pi Cycle Top, we look at some of these types of indicators, it gives us like a range of where we think, because they're moving averages, we're not
Right.
sure where it's going to converge. It looks like it's in the 150 to 250 range, so it's looking like the median of that is, maybe a 190 to 200 range based off of that data. There's a whole bunch of stuff. I mean, if Trump gets Powell out sooner and drops rates to 1.5% in the next 30 days, so there's a lot of things that could happen. But I would just say, based off of what we can see in the on-chain data, it's probably going to be somewhere, I'm sort of thinking in the 150 to 250 range. Maybe 200 is sort of the median of that. Yeah, the U.S. buying Bitcoin is really interesting. I would say it's my base case. I think it's the most probable scenario that the U.S. will be buying Bitcoin. Yes, I think that's going to happen relatively soon, and they will probably be buying more than most people expect. There's a couple of reasons why I feel really strongly about that. Number one, 2, and 3 is that the Trump administration is buying Bitcoin.
Yeah.
And when I say the Trump administration, Howard Lutnick, who's the Secretary of Commerce, who's Trump's old buddy for 30 years from Wall Street, who Trump brought on to run it. Before Trump won and before he became part of the Trump administration, Howard Lutnick is a OG Wall Streeter, owns a company called Cantor Fitzgerald, deep in Wall Street. And previous to this, it was a year ago at the Bitcoin conference, he came and announced that they were Cantor Fitzgerald would open up a $2 billion Bitcoin credit line for like institutional players. That was big. Back then, $2 billion in the Bitcoin space was still a lot of money. I mean, it still is. But then Cantor Fitzgerald, again, connecting in Wall Street, moving into the Trump administration, takes a majority position in MicroStrategy and Tether, the stablecoin. Making moves. It's interesting. Then joins the Trump administration, and now the Trump administration not only has the strategic Bitcoin reserve, but also potentially setting up a sovereign wealth fund. So, based off the fact of billions of dollars being purchased by the Trump administration, the stablecoins, all of that, I think they're telling us that Bitcoin is going to go much higher. Some of the things that they could control of that would be buying it for the strategic reserve or the sovereign wealth fund. And so that's why I feel pretty strongly, I'm guessing that's going to happen. And what happens when that happens is that the U.S. is the most influential country in the world. And if the U.S. does it, every other country is going to have to do it as well.
When governments expand debt and flood the system with new money, the result is always the same. Asset prices inflate. The U.S. Congressional Budget Office projects deficits, rising spending, and ballooning debt decades into the future. And if history is any guide, even those projections are conservative, because governments rarely spend less than expected. To put this into perspective, in 2010 the global store value basket, everything people hold to preserve wealth, like stocks, bonds, real estate, gold, and even collectibles, was worth about $364 trillion. Today, just 14 years later, that number is closer to $1 quadrillion. Nearly a tripling in value, and that expansion aligns directly with the growth of the global money supply. Looking forward, if we simply take the CBO's numbers at face value, this store value basket could reach around $1.6 quadrillion by 2030, $3.6 quadrillion by 2040, and more than $8 quadrillion by 2050. And remember, those are likely low-end estimates. Overspending and overprinting make it reasonable to assume the actual figures could be much higher. Let's get back to the interview.
I would say just real quickly, so I'm going to give you price targets out to 2050, maybe into 2060. But I typically think in 5-year terms. Saylor talks about 10-year timeframes because most businesses, so I told you I'm a venture capital investor in the Bitcoin space. A typical venture fund is about a 10-year lockup, right? And the reason why it's a 10-year lockup is because when I'm funding something like Uber or Airbnb in an angel round, it takes about 10 years to get liquidity. So people that build real companies, real investors, they think in timeframes, 10 years. I'm going to put money in, you put money into Kraken how long ago? 6-7 years ago? Yeah. And it's still there, right? So Saylor talks about these 10-year timeframes. Venture capital investors think in 10-year timeframes. I typically think in 5-year timeframes because I started my career in real estate. And from the time I'd find a piece of dirt to develop it and sell it was about 5 years. So I'm a little bit less. I don't really think in where it will be in 6 months from now.
Right.
I'm happy to play this game and we'll throw out a couple numbers. I think anybody trying to look at their portfolio on a monthly or quarterly basis will never make it.
100%.
Charlie Munger said that the big money's not made in the buying and the selling. The big money's made in the waiting. So I need to wait, number one, for the opportunity to develop, and number two, for it to grow. That's where the big money's made. Warren Buffett, his partner, said that if new investors came into the world knowing they only had 20 moves their entire career, 10 buys and 10 sells, they would outperform everybody. So I think if you're looking at your portfolio on a monthly basis, you're going to drive yourself crazy and you're never going to succeed. So let's start with the bigger picture and then we'll answer the shorter term pictures. So when global liquidity goes up, asset prices go up. Okay, so as the government continues to expand the debt-based monetary system, money goes up, asset prices go up. The government, the U.S. government's Congressional Budget Office, the CBO, projects out the next 30 years to 2054. So they tell us what they expect the deficit spending to be, the debt levels to be, the annual spending budget to be. They give us that. Now, in my opinion, they're going to be way off because they always spend more and increase the debt faster than they expect, but they give us the next 30 years. So I'm using this as an example. The first thing, if we go backwards in time a little bit, just so people can get an understanding, we have what's called store of value assets. And so we make money and we buy things, but eventually creators create more than they consume and they save it. And they're typically going to save it in store of value assets, which would be equities or bonds, maybe cash, gold, collectibles, art, things like that. Okay, that basket in 2010 was about $364 trillion. Today, that basket is about $1,000 trillion or 1 quadrillion. So from 364 to 1,000. So it's about tripled.
Yeah.
Okay, in 14 years. And that's based off of the rate of the monetary expansion. So the S&P 500, the median U.S. real estate, is pretty much a perfect proxy for the rate of monetary expansion. So we understand that. And then what we do is we take the CBO's numbers and project out, okay, if the debt continues to grow at that rate, what does that mean for this basket of goods? I believe that pushes this basket, this store value assets, to 1.6 quadrillion by the end of the decade, by 2030, 3.6 quadrillion by 2040, and I think it's 8.5 or 8.6 by 2050, because they project out to 2054. Now, again, I think that's conservative because they're going to print and spend more. Okay, so that's how big the basket is growing. Now, Bitcoin is a store value asset that's in there.
Yeah.
Since the Federal Reserve began shrinking its balance sheet, Bitcoin has surged an incredible 182%. That kind of move isn't random. It highlights just how sensitive Bitcoin is to U.S. monetary policy. Every shift in interest rates, balance sheet strategy, or tariff decision ripples through global markets, and Bitcoin is proving to be one of the most responsive assets. This connection has sparked intense debate. For years, analysts questioned whether Bitcoin truly reacted to Fed policy or if it was merely speculation driving price moves. But the evidence is getting harder to ignore. When liquidity tightens, Bitcoin faces headwinds. When liquidity loosens, the asset rallies. That naturally leads to the big question. What happens when the Fed eventually pivots back to expansionary policy? If a tightening cycle can fuel nearly 200% gains, then renewed money printing could drive Bitcoin into uncharted territory. For investors, this isn't just about short-term speculation. It's about recognizing Bitcoin as a direct barometer of global monetary shifts and positioning ahead of the Fed's next move. So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.